for on the report we had today, the CPI report. Why? Because number one, remember, anytime they cut rates, what is it that Powell focuses on? What's the main thing he focuses on? Food and shelter. That's most of the GDP. So unless you get some real bad numbers, there's not going to be a rate cut. So what happened today, the numbers we got identify that shelter and food's not cooling off. In fact, it's getting more expensive. Food increased 1% in 30 days. What, are you nuts? That's insane. Shelter increased. So that's why you're not going to get a rate cut. Those have to really cool off, tank before you get a rate cut. So always remember that. Always keep track of food and keep shelter, and you'll know if you're going to get a rate cut or not. Also, there's other reasons why today you're not going to get a rate cut. One is the political risk is back. That's right. So worries over Powell are back. That's really hitting the market hard again today. Investors saw, as I said, a direct threat, and the market tanked, went down 500 points. Because, again, they're scared. Who wouldn't be? You're going to put somebody in there that's going to base rate cuts on politics? So, but what happened yesterday? Well, there was an interference. There was the plunger team. Now, you always hear about the plunger team, but no, most people don't understand how the plunger team works, okay? So I'm going to explain how it works. And they use the plunger team all the time. So the plunger team drove the market, okay, from 560 up to a plus 60. How do they do that? Well, it's really simple. It's not hard. First of all, the Plunge Protection Team, who's that? It's the president and his team. Treasury Secretary, the SEC Chair, Commodities Future Trading Commission Chair, and also the Federal Reserve. Now, this is the key point right here of the plunger team, what it does, how it can change everything. Powell, remember, is the head of the Federal Reserve. Powell has primary dealers. Now, what are primary dealers? Those are the big banks like Goldman Sachs, the investment banks, Morgan Stanley, Bank of America, Citigroup. Those are the big guys. So those are his. He can control them, okay? So he'll say to them, I want you to go in now, and I want you to start buying, okay? Start buying stocks. But I want you to really go in and really hit the bond market. Buy those treasuries as much as you can, as fast as you can. The treasury's the big one because the treasury is the killer. When the treasury starts going up, the yield's going up, that signals everybody there's a problem. It's really tough on stocks. So what he did, he had them step in. They purchased treasuries. Yields dropped yesterday. And the big guys come in next. Now, who's that? So, again, his guys go in, Goldman Sachs, Citi, whatever. They buy the treasuries. Yields come down. They buy stocks, okay, pushing this, to move the stock market up. But then the big players come in automatically. Now, on Wall Street, there's an automated system. It's called bots. It's robotic. It's a trading system. That trading system kicks in automatically. And it's run by the biggest arbitrage players on Wall Street. What they do is when they see that the yield's coming down, they see all the stocks that they're buying, the market's not moving up enough, pushing that, trying to get that negative to positive, that clicks in and they do massive amount of buying until they kill the shorts. And the shorts have to turn around and start scrambling. And that's what they do. That's how it works. And that's what happened yesterday. Today, they're not interfering. So what's happening? Not a problem. Right? No problem. Market's going down. There's no interference. So next time you wonder why the market all of a sudden in the middle of the day or on the opening was down and they got it back. How the hell that happened? That's how they do it. It's cheating, but it's fun. Now, also another problem why the market's going down, play the Trump tape.
More people are working right now in the United States than at any time in the history of our country.
Okay, well, finish the statement. Well, here's the problem. Let me show you the chart. I'll put it up here for you. Let's take a look at this chart. Okay, play that one more time, what he's saying.
More people are working right now in the United States than at any time in the history of our country.
Okay, but he didn't finish his statement. What he should be saying is, but the workers are getting screwed. Even though we got more people working than ever before, look at this chart. They're getting less and less share of the production that they're creating. The lowest in about, well, since the 1940s. Look at this, how it's dropping. So the corporation profits are going up 11%, but guess what? Their share wages into those profits are not going up. In fact, they're going down. That's important. The reason why it's important is because what happens? That means there's less discretionary money. And when there's less discretionary money, nobody spends, we don't have growth, and that's when you run into a real problem. So that's what's going on. Let's take a look at some charts. Now, these are the stocks that we've been working on here at Phil's Gang. Our gold stocks have been the winners, okay? Have been the big winners. And that's what we're staying with. GDX, especially GDX. And let me get my GDX over. That has been our winner. Also has been a big winner is GLD, our gold. And of course, the banks, remember, are going down because Trump said that he wants to stop interest rates at 10%. No more are we going to do, 18 to 22%. He doesn't want that anymore. So we'll see what happens with that. So let's take a look. Here's our GDX. Look how well GDX is doing. Look how well our Barrick Gold is doing. Look how well our copper is doing, our silver is doing. All powerful stocks. Great volume, great trends. You can see my Pro 2 color-coded chart, all green. Now, let's go to the banks. The banks are getting hit. Not all of them. The ones that deal with credit cards. Look at JP Morgan getting hit big because they're big with credit cards. Now, that will turn to a short. My gang and I will short that as soon as it turns red on my Pro 2, and that'll happen when it hits 80. And it's already broke through the support. So this could be a great short in the next couple of days. Bank of America's gotten hit. This could be a good short in the next few days. And so those are the banks that are getting hit. Goldman Sachs is not getting hit because they don't deal with credit cards that much anyways, okay? And so if you're in the banks, you got to get out of the banks. You want to start shorting the banks that are getting hit when the Pro 2 turns red and you get your crossover. So that's what's going on with the banks. There's going to be a great opportunity for shorting there. And you got to learn how to sell short. If you don't know how to sell short, you're going to be part of the 93% that never make money. Look at, I've been teaching going long and short since 1998, okay? You've got to know both. Now, the banks are going to continue to get hit, okay? Now, again, the other thing that's going on is, besides the banks, the chip stocks, there's only a few that are doing well. Micron Technology, we're in Micron. We're in Taiwan Semi. They're doing good. ASML's doing good, LRCX, but every other chip, NVIDIA, Intel, AVGO, okay, AMD, all getting crushed. A real strong one, Marble, MRVO. Software, the only software that's doing well is Google. That's it. all the other software, PLTR, that's going to be a good short also. You know, let me talk to you about shorting. You got to stop listening, okay, to these guys on Wall Street telling you, don't short, you're going to lose your firstborn, you're going to go blind, you're going to lose everything. They do that on purpose so that when the market or your stock starts going on the downside, let's say the stock goes up 50, 60%, now it turns around and starts going down the other way. Well, on the upside, they put buy recommendations. On the downside, they do buy recommendations. Well, how can you do that? Well, because they want to suck in the retail investor, get them to buy on the dip, on the downtrend. You never do that. You only buy on the dip, on the trend that's going up. Doesn't that make sense? But they've been able to take parking space, and the retail investor, we call them tourist investor, they think they sit on the world's largest stupid bench. And as the market's going down, they're keeping buy recommendations so that you go buy. I'm talking about the tourists. They go in and buy, hold the market up, and they get, and Goldman Sachs and all the big investment get their clients out. They get the steelworkers union out. They get the police union out. And then also there's a pot of about $50 million. They want to get back in. So when the stock, just like Enron, when that finally collapsed, what'd they do? They finally changed it to a sell recommendation. Isn't that stupid? Why? Because why it wasn't a sell recommendation all the way down? Because they want you to buy on a dip, on a trend down, to hold the market up, so the big investment banks can get out the unions and make a lot of money for them. Then at the very end, when the stock went from $200 down to $10, that's when they hit the sell button, sell recommendation, scare out anybody else who's still in there buying, so they can take that $50 million, reinvest it, and it starts going up again. Same trick over and over. You've got to learn how to sell short. They have been so unbelievable. I mean, what an idea that was. Think about it. What are you, nuts? Convince the people not to sell short, that we can screw them, they can hold the market up, and we'll get all our big institutions, and we'll get bigger and bigger and bigger. That's how they got so big, the investment banks. So if you don't know how to sell short, that means you got to trade to perfection. Every stock you buy that's so long, you got to trade to perfection. That's insane. It just doesn't work that way. Last thing too is the workers. Like I said, they're telling us that the workers, the labor market's getting better. It's not getting better. I just told you about what's going on with the wages, right? Now listen what they're saying about the consumer, how they're out there buying.
The consumer has been spending, they're consuming. We're looking at retail sales. I look at credit card data, $1 trillion in holiday spending this past season.
Yeah, that's right. But how they buy? Where do they get the money? Their credit card. And then they do a lot of store credit cards. You go in the store, you open a credit card with Macy, you open a credit card with somebody else. They're lying to you. Look, join my gang. We've been teaching people since 1998, okay? And we'll show you how to do both, long and short. We'll have fun at it. See you on the charts, philsgang.com.